Welcome to another episode of Limitless Trading. We wanted to show you where we're at, and hopefully, you caught the pivots and the trend lines that we have been talking about. I said that once the 58.46 held and then it slightly retested on the pause, that's not pause. Market doesn't care about tariffs anymore. Tariffs are done. That the market was going to start consolidating and squeezing to get the three wise men out. And we said 56.30 was our target with a little pit stop here at 53.87 to trap some bears. Q2 has not been bearish since 2003. Now, can it end this month or this quarter because of all this bearishness? Yes. But if you look at the same chart from Trump 1.0, the market rolled over in April. And by July 27th, it was like it was nothing had happened. Now, does that mean we go all the way up? Who knows? But you want to go level by level. If you took the long at the levels we said, 52.12 defending or 5,300 defending, or a little bit of a back test that I told everybody, there was a pivot coming at 55.80. It rejected, came down on bad GDP because I said that Q3 and Q4 is going to be a very long, painful recession. And the numbers today showed that, in fact, the GDP is rolling over, right? So that's undisputed. But market likes good news. Market makers wanted to get out. The three wise men are getting out at 56.30. The market could easily blow past this and say, you know what? Everybody from the election wants out. We're going to go to 59.85 possible. What I tell everybody is, don't get bullish in the nosebleed section. Every time frame is bearish divergence. So we're seeing short covering. Everybody wants out because now we know that after Q2 into May, June, and July, which has been bull season since 2003, that market makers just want out. They want out because once the market starts rolling over, it's going to be up to the Fed. And we said there was a pivot coming on Tuesday, and we have another pivot coming in. We have a shallow pivot coming May 1st, but the next major pivot is May 12th, where we suspect it's going to be a little bit of a bear trap, right? So FOMC is next week. Powell's probably going to disappoint the market and cool off the market and say, hey, we just got to let this work out because there is, in fact, supply chain issues coming out of the West Coast. They're letting us know. And the GDP shows us that we're rolling over. So set an alert, let something back test like anything under 5,500. I would set an alert for the retest of 54.50, which was today's kind of catapult. And then don't do anything. I know that it can go up to 5,800 and everybody wants to get FOMO, but up here, we're basically in the same boat as the three wise men that took a trade and then they got stuck down here. They're finally getting out. Let them get out. You want to go long when we get a bounce into bull season. Now, can you short 56.30 rejection? I would wait to see if 55.80 breaks down. Take your short and then have a stop at around 5,400. Is this gap going to fill? Yes. Is it going to fill on FOMC? Is it going to fill in July? Who knows, right? The market makers will decide when it fills, but in fact will fill. Can it fill on the Apple earnings and Amazon earnings, which is more kind of affected, or the jobs report, they're more affected by these tariffs? Possible. I don't venture to guess because GDP is rolling over. We had said it in prior videos that GDP was rolling over. Yet we're up here because Meta and Microsoft really aren't affected by GDP. On the smaller time frame, again, I have an alert set for at least the back test of 45.50. Can it go higher? Yes. I am not going to trade in the nosebleed section. I'd rather turn off my monitor and enjoy my April, May, June, July. I don't buy nosebleed sections on bearish divergences. I just don't. I'd rather abstain from the market, have some shares, get into other trades, and let SPY or ES do what it's going to do. You want to set an alert minimum 54.34, right? 55.15, which was a catapult, or 55.50 back test of where we went, because all of this is a big bearish divergences. So yes, the earnings save the market, but the divergences are still clear. Market makers are selling as they pump up. But if you want to buy, again, wait for 55.56, 55.34, 55.17, or if you're going to short into at least late June, right? June 20th. So June 7th should be a very, very bearish pivot. And then that's another sort of low into the final run into July 27th, which will be the top for 2025. Where the top will be, we're going to find out together. We don't, again, presume to be guessing, but take it one level at a time. If you were long, you're just clearing the books, clearing your shares. Let's wait to see what the jobs report. Let's see if Powell cools off the market and says, hey, I'm not ready to cut rates. Trump is going to get into a pissy match with him. That's going to cool off the markets. And then let's see what bearish news we get into May 12th that will give us a next buy into Memorial Weekend. If you want to subscribe, like, and if you want to know what AI we use, what tools we use to be able to predict these moves, comment course below or email us, and we'd love to have you join our team.